All right. Guess who's back? It's me. I mean, don't think it would have been anyone else. I don't know if that. Oh, look at that. A little more bright. Okay. So, looking at this screen, you guys probably have no fucking clue what I drew out. Obviously, you weren't there with me when I drew it out. So, I hope this comes up pretty good the on this screen. So all of these lines are. This was Thursday, last week. Obviously, this says Wednesday, but it's from Wednesday Asia Open until Thursday New York close, which is Thursday. That's how they calculate days. It's from the previous days, like it's from the day's open to the next day's close, and that counts as like it when it ends. That's the day that it lands on. Obviously, so each blue line is each line is a trade that I would have taken. Not just that I would have taken, but a trade that I would have used Powell's strategy on. The whole rejection wick theory. I mean, I guess it's not really a theory, but technically a theory. So the theory is that, like, you're going through price action. There's obviously consolidation in some prices, like on like this side, and then there's accumulation, there's distribution, all that. It's good stuff. So with that being said, each blue line is a trade that would have been profitable, and each red line is a trade that would have been non-profitable, loss. Each trade I would have taken every one of these trades if I had seen them in live market. Like if I had watched it the whole day, I could have taken every single one of these trades. I hope this isn't too loud, by the way. I'm holding my microphone. I'll put it right here. I hope that's better. So yeah, we have in our first block, this is like Australia, Asia session. So this runs from 3 p.m. For me, it's 3 p.m. until 12 at night. That's when London opens. So from those 9 hours, there are 4 possible trades that I could have taken. One would have been a loss. The other 3 would have been a win. And I did this obviously for each session. Excuse me. On London session, we have quite a few more. Obviously, there's more price action. We're doing more stuff. We're not just sitting around accumulating or consolidating, in a sense. So from 12 o'clock until... I usually just count it up until 6:30 because that's when New York starts. So from 12 to 6:30, I mean, I guess I'll say 6:25 since 6:30 would have been a different trade. I would have taken 1, 2, 3, 4, 5. There were 6 possible trades. 2 of those were losses, 4 of those were wins. And then for the last block of the day, we have all of these. So New York opened and we had this big rejection wick. I don't know if you guys, here I'll zoom in just to this one. I wouldn't mind going through each one of these, but there's literally I think it's like 20 trades that I couldn't explain. So this rejection wick was made right here. Obviously we take liquidity and push higher. The wick goes way down, so I would have used this on the 5. Obviously, price taps into it right here. But you're not looking to hunt these highs because you've already taken them out. You're looking to hunt these highs, which obviously do get taken out, but not according to this one. This one immediately gets wicked out, right? I mean, the trade would have been taken right here, or even if you took it the quarter, and then you would have been taken out by this candle. So this candle, I think it was on the 15th. That's where I would have taken this trade, if I'm not entirely wrong. Hold on. Oh no, that's right. I used it according to that wick. So this wick right here, it's a trade that you could have taken earlier in the day. So where was it? This, I think it's this one. So it's a 15-minute and a 5-minute. Sorry, you guys over here, not over here. It's a 15-minute and a 5-minute. So you couldn't take it based off of this wick, which obviously this is the trade that I would have taken earlier off of it. This is a London wick. You tap into it, push way higher. Now say you didn't see this one, but you also have this one over here, this 5-minute wick right here, which you could have taken a profitable trade off of this one as well. So New York basically takes out all of the pre-market shit, opening lows, all of it right here at 6:45. And when it does that, you're taking liquidity, which it's like one of the main things you have to use with this entire like model, is that you either have to take liquidity or like, because you are trading at a low. So you're not just like throwing a trade in at like this. You have to be trading down here, because this is the candle that took liquidity, you know? So when you tap back into it, that's where you enter and you're targeting highs. Sorry. Don't know why I said that weird. It's very finicky, because obviously there's not way more, but there's a chance that you got taken out. It's not 100%. And so you could have gotten taken out here, here, here on all these wicks. Either way. So you could have entered on this one, taken this. There's all of these wicks as well. So from 6:30, let's just go back. Scroll it back a little. 6:30 to market close, there was 1, 2, 3, 4, 5, 6, 7, 8, 9. There were 9 possible trades with one loss. Now I went through, and obviously there's other wicks. You can see this one right here. I think that's just about it. Like, this is the only other wick that would have like post here that you could have gotten fucked out on. There was obviously like this wick that you could have used, but it only got tapped into after market basically closed. So at 13:30, I'm not allowed to trade anymore. That's when okay. So obviously my MFFU closes at 1:30, and then we're not allowed to trade anymore. What does this mean? I wouldn't have taken this trade. This is a really good wick, don't get me wrong. But you also have to understand that even with this candle that, you know, you took out the previous candle's low, you didn't take out you didn't take out the low of this low. Like, you just took out the 5-minute candle low that was like an up candle. You didn't take out this piece. This is what you would have needed to have taken out. So again, like, this is like, it looks like a good setup because you have this big wick, but not really. I think so. Like, this wick, this is a pretty good rejection wick. I think the only reason I said I didn't want to take this was because of how small the size was. If I'm not completely incorrect. Let me see. A lot of these ones too are on the 15-minute chart because they're just not it's not enough liquidity this late in the day really to be taking these huge wicks just off of, or to be creating these huge wicks. Like, obviously you make them, but a lot of them aren't in the spot that we want. So to find the spot that we want, you got to go on the 15, because that just shows more like better not not clearance, but like you can see more on the 15. Either way. So this one at 1105. This looks like a good wick, right? However, you have made this wick after your high. So yes, it did take out the high. And this might be a nice wick on the 15. I think 5. Yeah, it would have been like 11. Not that good of a wick. It would have been like what? 97 to 7. It would have been a pretty nice wick actually. But on the 15, let's take a little look-see-loo. Like this. Oh yeah, so this is one of the ones I did take. So on the 15, this makes sense to take, right? You would have tapped right here, taken it to this low. You could have taken it to this low. On the 5-minute, there's better draws for lows. Like here, which you could have easily taken it to. There's another trade in here. I believe it was like here, if I'm not wrong, or here. It was a good draw and everything, but the risk to reward was like so small. So you would have had to increase your what do you call it? Your contracts. You would have had to increase your risk, which is not what we want to do if we're taking this many trades. So like this wick, you could have taken it on the 5, but you're not at the high. On the 15, you're at the high, you tap it, and obviously you never go above it. Your stop would have been like 15 points. Say you put it like the quarter. You would have been completely good with your stop at 15 points, 60 ticks, all good. And then you take lows, obviously. This is another example right here. So the way I found it is that there's a lot of these like areas, don't get me wrong, but some of them include a low that is like, or sorry, the wick, the rejection wick is too small. Like it is, if it's less than $6 of a wick on the 5-minute chart, don't take it. I think it's like double for the 15. So if it's like smaller than a 12 or a $10 wick for the 15-minute, don't take it. It's just not worth it. There's more, it's because I plotted all those out. They're just not, that's not part of my risk, I would say. Like that's not part of my rules for this. So yeah. So there's a lot of trades to take, obviously. However, you just have to be careful which ones you do take, because there is a shit ton. There's more than this. These are just the ones that I would have taken. So you have to be watching for the wick size, your draw on liquidity, your RR, your like where you're gonna go. You have to watch, obviously, when price is opening, like what's going on. Why would you take so like for example, why would you can obviously long it market open. There's nothing wrong with that, but it's like the chances you're gonna get fucked over way higher. I personally, like, these are trades I could have taken, but I would not have, considering how early they were into market. Regardless, it's a good trade. You just have to watch your risk. So like on the 15, let me see. I think I was trying to show this. I really want to nail this one. Let's move this over. So this wick right here, this caused a rejection right here. And I would have taken this 15-minute wick for this. You obviously tap it. You can go high. You go way higher. You take out the highs. It's like the middle of the set. It's your middle, like basically your middle point, I would say, of your entire range. And so when you're going to break out of that range, you should be looking at something like that. In my opinion. In my humble opinion. So yeah. There is a lot of data to intake. This is on a single day. It took me like an hour and a half to plot all of these out and to go through the RR, the wick sizes, like would I have taken this trade or not based on the time of the day, everything. Like, I think also personally, I wouldn't be trading if it's not Asia session yet. Australia, like this, I wouldn't have taken. However, market opened right here. So this one I would have taken. I have no problem with that. I think this was on the 15 minute. Um, and obviously anything after this, probably not 6:30, and obviously definitely not at 1 o'clock. So kind of anything between 5 p.m. and anything between 5 p.m. and 1 p.m. If it's after 1 p.m., stop all the limit orders, stop everything. Sorry if I'm like, if I sound lethargic. I had a lot of food. I've been eating a lot of carbs because I've been feeling drained of my energy. I've been relying on energy drinks, so I'm trying to up my carbs for a few days, for like the past 2 days, for just to feel better in the gym. So I saved all these. Hopefully, there's nothing revealing here. I accidentally showed my email earlier on my login, so I will be cutting out. So yeah, we can delete all this. Finally, now that I showed you guys, and we can go to today. So really quick about today, there wasn't a lot. I'll be entirely honest. We obviously had a pretty good range. Where was it from? So it was from literally here to here. There was maybe about 4 or 5 possible trades that I would have taken. I'm gonna be completely honest. So let's go through it really quick. On the 5 minute, you have this one, Asia Open, obviously. This is also just a good level to watch. It's not much wrong with it. It's like a pretty good draw. So obviously market opened at 6:30, did whatever it wanted to. So actually, let's not care about New York session. Let's focus on back here. So we open, we go lower, we make a low wick. So obviously this isn't worth shit. And you have this high wick, but 81 to 87, $6. Not taking anything based off of that. You obviously can't take anything off of here as a rejection because you have the gap. It's just not like that is a bigger draw than you can imagine. It's a really big draw. So until that draw gets filled, kind of don't touch it. So we have here a high. This looks like a pretty good candle. I don't see anything wrong with it. 38 to 46, it's like $8. I would have taken that. However, didn't get tapped into. And so I think that once it doesn't get tapped into like that, well, considering how small it is, it's just not worth it to keep that limit order in. You obviously can if you want to. Nothing wrong with it. But I think on the 15, this might be a better wick. We'll definitely take a look at it. Down here, we don't have anything. We have this one. But 97... 303, $6. No. Obviously, we also don't tap into it, but we just shoot higher. What else? We're gonna go back through this on the 15-minute. So at this high, nothing. No wick, nothing. Pretty good rejection block, but again, when do we tap into that? Down here, we have a pretty nice wick down. 57 to 45, $12. Really nice. However, we never tap into this wick again until New York session. So we'll get back to that. Down here, no wick. Down here, not really a wick. Up here, no down wick. Up here, yes. So let's take a little look-see. 350 to 61, pretty good wick size. You're obviously taking out liquidity right here. And we have previous draws down here or here to target. So you can place it obviously at the open. You can place it at the halfway point. You can place it at the quarter. Any one of those is valid. I usually try to go for the quarter because that covers, obviously, if it's going to go a little higher than just touching the rejection wick. But it also covers up until the 75 if you want to get decent like stop like wick decent stop loss. So you obviously come in here, you basically go back to the half point, maybe a little over, and then you shoot down, take out this low, um, and then obviously you end up taking out this low. So any one of those would have been valid to leave. You could have like left a runner, would have been completely fine. Um, Now this looks like a pretty good rejection wick. However, this wick is not bigger, so I would not have taken anything based on that. Obviously, same thing here. Your down wick on your up candle is nice, but your body is like that body of the candle is shitty. It is too small to be considering an up move. Like you want to see something like this or like chunky, because when it's that small, it's showing indecision in where the price wants to go, and so it kind of lucked out essentially on being an up candle. It's just a doji candle. That's all it is. Also, the reason I wouldn't have taken this is because these down wicks are too big. You did not, your up candle did not push past these down wicks, and so it's not part of the low. You could have obviously taken this one, so 340 to 348, $8 candle, put it at the half point, cover to your up here, shebang. Hit this low, hit this low. It's all good. Or sorry, hit this low, hit this low. It's all good. So like this looks like a pretty good draw. I'm not gonna lie. You're at kind of the bottom of the range, or I say bottom of the range, but you're at like you have a low, higher low, higher low, lower high. Sorry, lower low, higher low. So obviously when we tap back into this, what do? We show some rejection. And obviously you could have ridden that until that London session got tapped. 305 to 90. So that's a pretty good wick size too. It's a really good wick size. However, you would have gotten stopped out. And hey, that's okay. It's just what happens, you know. Sometimes you take a loss. But on the other hand, what do we have? Like over here. So we don't have anything down here. Not enough big wicks. Don't have anything over here. Not enough big down wicks. What do you have here? 354 to 347. A little over $7, I think. Or a little under $7. Either way, not $6. So you just wanted to be bigger than $6 is all. Let's check the exact. Opened at 47.5, hit the high at 54, so like 650. So this is like a risky trade basically. You can expect to get fucked out, but your stop loss is pretty small. So you're over that $6 mark, obviously. However, I mean, you tap into it and you take lows. There's no however. This is a good trade. You're just risking. Your risk is more likely to be that you're going to get fucked over, seeing how small the wick size is, and the body as well. However, it does. You're also in a downtrend. Like you took liquidity, but you did not take out the high here. You just took out this high, which is a pretty good high. So either way, you tap it, push it all the way. You can target these highs, or sorry, target these lows or these lows, whichever one you want. Both get taken out. There's another area right here. You could have taken. So you're obviously showing rejection. Rejection wick. That's the whole point. Tap here, push here. Pretty small wick size if you just want to toss it in. It's 22 to 26, $4 wick. Really not something I would have taken, but it works. Um, you have this wick here, but it's not part of a low. You did not take out any liquidity. You have this wick here. This is a really good wick. I say really good, but we were kind of stagnant for 20-30 minutes. But hey, that's pretty fucking big down candle. I think there was news here, so that's the only reason it went down. You obviously did not tap into that wick again, so there's no point of taking something like that. And obviously you waited way too long. You waited over an hour just to tap back into it, and this one took a high. So you would have gotten fucked out. You would have gotten fucked over immediately. It's just not worth it. Maybe on the higher time frame or a lower time frame, but on here, on the 5, not worth it. Obviously, we have nothing down here, nothing up here. We do have hit this. This is the only one I think I would have taken. So this is at 345. We tap this. On the 15, it looks way better, trust. Because you have these 3 candles, and then this taps back into the wick if I'm not completely wrong. So you do whatever. You're obviously your down wick is better. Your up candles low, like wick low, is lower than all this, so you still have liquidity. And then you obviously push right back up. This was a really good one. So at 4:30, I don't know what happened, but you have a really good draw. Tap back into it, push all the way back down, take out all these lows. Price is kind of just consolidating at this point. So if you see, price never broke out of this range until New York session. The only other trade I think I would have taken besides this one that I was talking about, where we tapped here, or this one, but you would have got fucked over. It's a nice wick, and obviously it's a draw, but you're just more likely to get done for. So here, tap into it and push higher. There's nothing post New York session, I'm not gonna lie. I went through this like through 2 or 3 times. I think there was one, I think it's this. So this candle, this wick went from 25 until 34, little under $10. You tap it, obviously, say you put that at the half point because it's a bigger wick. Put your limit to the highs. Oh, guess we're resetting our charts. And then you just target the low right here, the most previous low. Pretty good draws, I'm not gonna lie. Yeah. I don't think there's much of anything else on here. No highs or lows. This one was a nice little wick, but you did not take liquidity. We never took liquidity on. Like, this was our high day. We never even went above this high. On on ES, there's a few more. It's just the RR is nowhere near as good. You don't know. I don't know where to put the stops on ES. I don't know if I should do 3 points or 4 points or 5 points. It's just a lot. I just feel like it's a lot more difficult to gauge, simply because it's a slower moving indice. However, I do remember this low never became a low on ES. I mean, it never went this low. So there was a huge SMT, and that's why we pushed higher. All right, you can always use your indices to like intertwine and target shit. But on the 10 a.m., there was only one time or two times we tapped into it. So we tapped into it right here and here. It was sort of, this is pretty nice. So when I saw this, not when it was forming, but like when I was looking back on it. You obviously are breaking structure right here, change the state of delivery, albeit on the 1 minute, so take it as you wish. But then, fuck, you have this rejection block. So this rejection block lines perfectly with the 10 o'clock. So as soon as you close up above this, place your limit order and say you want to do until the half of this rejection block. I mean, you could do 60 points, or sorry, 60 ticks, if you really wanted to. Or if you want to target like the quarter, you can use 60 ticks and you're covering up until this like the 7-5. You can barely tap into the quarter. It's like right there. Either way, target all the way up here, 1 to 7. Again, some pretty good like earlier draws, but it was a no news Monday, so I didn't expect much from New York session. Tomorrow we have CPI, day after we have PPI, so again, not trading. I will be doing some videos. I want to go over some stuff, but not, it's not like extremely important, I suppose. I just want to go over like kind of my reasoning, my risk. I just need a refresher basically on what I'm doing. So if you want to watch it, it's cool, but if not, it's okay. We're at 30 minutes already, so I think I'm gonna cut it there. We had some pretty good draws. We have our strategy being tested again and again, and I love it. I don't like it, I love it. It's really nice to see that it gets tested, even if it's a failure. To see it get tested and be a failure, I can see why, like what we're doing when it fails, you know. So yeah, I will see you guys tomorrow with another video, a little earlier than today. Today I accidentally took a 4-hour nap, so but that's okay. I'll see you guys tomorrow. Have a good day. Peace.